Hello everyone, this is Mike Torres from VERTEX-FX. Today we'll be discussing the Relative Strength Index RSI. First, with disclaimer, today's training is designed to instruct in some of VERTEX-FX charting program. We'll be providing some guidelines for using certain features in the software. However, nothing in this training should be intended as or should be construed to be a recommendation to buy or sell any specific security or currency. The information, technical analysis techniques, and software presented today should be used by investors who are aware of the risk inherent in trading. VERTEX-FX shall have no liability for any investment decision and trading strategy or any information provided in connection with the company. Okay, we'll press on, let's start the RSIs. Just press chart, add indicator, and go to the relative strength index. Very simple. It's recommended to use the reading 14 on the RSIs. Let me give you a briefing on the RSIs. It was developed by J. Wells Wilder, introduced in his book 1978, New Concepts in Technical Trading. The RSIs is a very helpful and useful and popular momentum oscillator. The RSI compares the magnitude of the move recent gains to the magnitude of the recent losses, and turns that information into a number that ranges from 0 to 100. It's recommended to use the RSIs in three ways: extreme overbought oversold situations, divergences, and center line crossovers. Let's talk first about the divergence. I like to use the RSIs on the divergence because the divergence is very clear on the RSI. If you see, we have a low here, and here we had a new low in the market. Here the RSIs was trading low, and once the market made a new low, the RSIs was trading higher. So this was a beautiful divergence and gave us a very nice upward movement in the market. This is the first use of the divergence. This is a bullish divergence. Let's look at another usage of the RSI, the extreme overbought oversold situation. Usually we draw the 30 line and 70 line as recommended by J. Wells Wilder. If the market goes above the 70 line by a distance and starts dropping, it will be a nice indicator that the market is a sell. So assuming we saw this and the market was trading at a really overbought situation, the market reacted and dropped. It's a very healthy reaction. The market dropped from 166.70 towards 158.33 within 1, 2, 3, 4, 5, 6 working days. So it was quite a very nice drop in the market. Here also we see the RSI is trading at a very low level. You see the market rallied from 148 towards 150, 196 within 1, 2, 3, 4 days. So usually the reaction when the RSI is on an extreme overbought oversold situation, it gives us a beautiful reaction. The central line crossover. For the RSI, it's 50. Reading above and below can give the indicator a bullish or a bearish tile. On the whole, reading above 50 indicates that the average gains are higher than the average losses, and the reading below 50 indicates that the losses are winning the battle. Some traders look for the move above 50 to confirm a bullish signal, or move below 50 to confirm a bearish signal. Okay, let's see the confirmation. Let's look at this point. Here the market traded under the 50, and it confirmed a downward movement. Here traded above the 50, confirmed an upward movement. The way I like to trade the indicator RSI. This is the point I like. I want to show you why I like this point. Here the market tried to go above the 50. It failed. It went lower, and the market went lower. Here the market went above the 50, and it dropped, and the market dropped. Here the market tried to re-enter the 50. Look how many times. Here it entered it. Here it's trying to re-enter. It tried it once, and then twice, failing to re-enter the 50. This is called a failure in the market. I haven't seen many books talking about this kind of movement, but I have noticed in my extensive experience in the market that this tends to have reverse the direction in the market. So if the market tries to enter the 50, then enters it, then tries to re-enter it again and fails, you see there is a big drop in the market. And here, because the market could not enter the 50, the market dropped. And if we want to see the magnitude of this move, it's quite big. From these levels, from around 159 to around 148. So we're talking about around 1,000 points in the market from a small indicator. Every currency has its own character. I advise you to understand the character of that currency, and then once you understand that character, understand some patterns that are repeated in that currency, and trade it. This is Mike Torres signing out, wishing you best of luck in trading.